Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Greg Taylor, Chief Investment Officer with Purpose Investments, to discuss why now is the time to be tactical in your portfolio with earnings and key macro events on the horizon. Greg, it's great to have you with us. Welcome to Trade Talks.
Great. Thanks for having me.
And Greg, let's start with earnings. We know the macro headwinds facing the market, including central bank policy, global inflation, and geopolitics. Do you think the market has discounted those headwinds with earnings season starting in earnest this week?
Well, I think they've done a good job discounting the rise in interest rates. It feels like that's already priced into the market, and we're seeing that with certain sectors taking more of a hit than other areas. But really, I think earnings is going to be the next big shoe to drop, and that's the big fear that we've gotten. And the good thing is, going into this, the setup's looking a little better because you're not going to find many bulls out there right now. Sentiment's really washed out. There's a lot of people that are very bearish on markets. But the big things to watch is to watch these earnings. The last quarter was a positive surprise because companies did a way better job controlling their expenses and were able to have slight beats on their earnings numbers. And that's the big fear right now. Can they do that same thing again, or are we going to see fairly big aggressive misses on these earnings numbers? And that's the big question we've got to answer in the next few weeks.
What are your expectations in terms of market volatility with the U.S. midterm elections taking place in November?
Well, volatility is going to be around for a while, I think. Certainly when you've got central banks really that are going out to try and take inflation down and be very aggressive. Volatility is something we've got to get used to. Normally, you're right. Midterm elections are the source of a lot of that volatility, and usually it's also really a good seasonally time to start adding to markets. When you look back at market history, the 6 months post the midterm elections is one of the more bullish times for investors. But really, this year feels a little different because when you talk to investors and strategists around the world, U.S. midterms are maybe fourth or fifth of things they're concerned about. We've got inflation, we've got the big move in the U.S. dollar, we've got the big move in interest rates, and we've got the geopolitical problems with Russia and Ukraine. So midterm elections may not be as front and center as they have been in other years, but they're certainly going to cause some volatility.
Why should investors be tactical and seek active investment strategies in the current market cycle?
Well, I think when you've got a big move like we've had right now, when really correlations have gone to one, that all asset classes are acting very much in a risk-off moment from bonds to fixed income. When you're buying a broader index, what you're doing is getting everything. And when you've got moves, when you've got the Nasdaq down 30% on the year, this is really a good time to be a stock picker. So you want to look at names that are really oversold and maybe been caught up because they're a stock and they're part of an index and not really what they've done themselves. And this is a good time to be tactical, to pick your levels, maybe start scaling into companies that you like at different levels, and also making sure you're not just buying the broader index, but picking companies that you've done your work on it and you think will do better.
In a recent note, you wrote that investors should not try to be heroes and take undue risk. Overall, how do you think investors should be positioned?
Well, it's going to be interesting because we come out of a situation when the Fed was basically doing everything to provide a backstop to risk assets, and markets have done incredibly well over the last almost 10 years. And investors have been trained to buy every dip because you buy a dip and it seems like it's higher 3 to 4 months from now. That tone's really changed. We really got the signal that the central banks are out and they really want to win this battle against inflation, and they're willing to risk a recession to do that. So this has been a really big change for investors, and really they had to learn that buying the dip doesn't always work. So don't need to be a hero here. Kind of pick your spots. And I think there might be some opportunities coming up in the next few weeks. Certainly, we need to see things go our way. We need to get through this earnings season. That's going to be hopefully a little better than feared. It would be nice to see a peak in CPI so central banks can be a little less hawkish in what they're doing and try and talk a little better game. But really, it's too uncertain. It's not a time for investors to go all in, use margin or leverage. That's not what we'd recommend right now. And it's more be patient, wait for things to turn in our favor, and pick companies that you like.
All right, Greg, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you. Thanks for having me.